This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech players in the world today. Okay, let's roll.
Hello, everybody, and welcome to Breaking Banks Europe. I'm Francesca Aliverti, and we are here today for a very special episode featuring one of the most promising company into the payment space. And I'm talking about ZotaPay. So I'm here with two guests, and with them, we will deep dive into the alternative payment methods field, which is actually the core business of the company. So let me introduce them to you. I have the pleasure to have here Valerie Standret, product manager at ZotaPay. Hello, Valerie, and welcome to the show.
Hi, Francesca.
And also her colleague, Alex Behar, Chief Information Officer, also at ZotaPay. Hello, Alex. Welcome.
Hello, Francesca. Thanks for having us.
Thanks for joining us. So, as I mentioned earlier, ZotaPay is a quite well-known company working globally within the alternative payment methods field, and especially focusing on connecting merchants in Europe, but also in the US with the emerging markets. So let's try firstly to understand a little bit more this field, and we all know that definitely alternative methods, payment methods, are quite crucial, especially when we talk about emerging markets. So if we look at some data, we will see that the penetration of credit cards is really low, and also, for example, the access to bank accounts, it's also another very low data. So let's try to set a little bit the stage considering this, Valerie, and let's try to define why alternative payments are so crucial when we talk about alternative emerging markets, and also what is the ecosystem that ZotaPay has to work in every day.
Sure. So the popularity of the alternative payment method has grown in the recent years, especially after the pandemic, when most of the world moved to the online payments because they didn't have a choice much. Basically, what the benefits of the alternative payment methods we see, that's first of all, they're lower risk and they have less fraud than the credit card transactions. So basically, it's more secure way of doing the payments. So it makes them ideal for the online transactions. Among their benefits, it's also speed, ease, and accessibility, because most of the APMs, they don't really require bank access to the bank account, which basically it's a big relief for people in the emerging markets, which either don't open bank account or they get used to, they would like to use more their cell phones. So it's wider way of options to make the payments, not only to have a physical credit card or to have a bank account and you are stick only to this one payment. So how we are trying to, like our ZotaPay ecosystem operating in this, we started our company as an opportunity to work first of all with the emerging markets, which are more problematic markets, and they now became one of our biggest markets. So other companies, they have issues there, we have profit there, and we already know how to deal with them, how to work there, how to adapt it to the needs of the users and our clients. So our biggest markets are actually China, Southeast Asia, Africa, and we are keeping large in this network and being the same, like on time with improving them, because markets really fast growing, and as we're talking, probably now somebody already thinking, oh, maybe this kind of payment method, like payment flow, will be better for our current generation, current people. So, and maybe like in a half a year, it will be more innovations. Ready to accept the challenge.
Yeah, definitely. And, emerging markets, it was funny that you mentioned that for some companies, these are problematic markets. And for you, it's actually quite profitable because it's actually a huge, there are huge opportunities over there because there is a big gap probably to be filled. So let's talk a little bit of a macro perspective, keep talking about emerging markets. So you mentioned the pandemic was a great accelerator for digital products and purchases, but also if we consider a macro perspective where the middle class it's really growing in emerging markets, therefore also their possibility to buy digital products is also increasing. So how do you make sure you tackle all the necessities of this group of people where, as you mentioned, other companies are lacking?
Yeah, so first of all, we are following these trends in these local markets, and we are making sure that we are trying to integrate all the new payment methods or the most popular payment methods, and also plus one word to why it's so important to do the accent on the alternative payment methods. It's first of all that every country, they have a unique payment culture. So it's not like all the world using credit cards. For example, I will just give like three of the main examples. Let's say in China, they have completely their own ecosystem of cards, their own network connected to it's not really card payments, it's not really bank payments, it's all connected together. It's only within China, it's native for those people. So if Chinese person will have a visa, they will not know what to do with this. So if we have our merchants who wants to start working and collecting funds in China, it's very naive to think that they can just put the Visa Mastercard logo on the payment page and accept the payments. Also in LATAM, it's also different culture of the people where they're still less even digital. They prefer to go and pay with cash, even receive payouts with cash. It's also new ways of accepting and operating funds. Or for example, in Africa, people prefer not to open bank accounts, just to have their mobiles. And let's say in Africa, it's possible to do the payments using the mobile carrier. It's something sounds very strange for us, but it is very native for them. And so we, from our side, trying to follow all of these trends.
So you really need to adjust on the culture you find in the country. Makes sense.
And I would like to add on their financial system as well. In Africa, the volatility of these emerging market currencies was very high, and as a result, people lost trust to an extent. And don't let me sound like a digital asset and a crypto finance, but people just lost confidence in their financial systems in certain countries, and they just started using alternative financial systems. And the phone minutes, effectively time, is valuable. Who would have thought? And effectively, they're able to exchange value in the form of proxy assets, which could be phone minutes or source of credits and so on and so forth.
Yeah, definitely. What you're saying made me thought that it's really funny because I usually work a lot with emerging markets. And I travel a lot to emerging countries, both for pleasure and for work. And I've been recently for 1 month in India. So it was very funny because I was with a lot of European and American people. And in local markets or local places, not even proper restaurants, like street food places, everywhere there was this sign that people could actually pay digitally. And everybody, I mean, I was used to that because I work in the financial services, but everybody else was like, okay, my God, they don't have maybe basic stuff, clean water and things like that, but they are so much far from us in terms of digital payments and things like that. And many times when I hear these things, I always think that it's just, it's just a different way to, it's just a different method. It's not really like we always refer to underbanked, and of course many of them are, but it's just a completely different way to look at a way of payment. So when you enter in a country, you really need to adapt on the culture you find in this place, right? And we are completely used to other payment methods. So for us, credit card, it's something that it's completely normal, while for them, something that it's much easier, digital payments, it's something that is actually quite common. So keeping talking about this, I would like to know from your point of view, why credit cards are completely losing the battle in the emerging markets. So which are the factors?
First of all, it's what we spoke before. It's about the fraud. So alternative payment methods way much more secure. Besides this, the alternative payment methods make payment faster and more convenient. For example, when you need to do a payment with the credit card, usually you need to remember the card and all of the details. But not only this, you need to fill in billing address, your address. For some people, maybe it can be too long. Even from my point, like when I'm doing a payment, I really like when everything is secure. I just click the button and it proceeds.
Sorry, Valerie, we have all of us have this moment where they are sitting in the sofa and they are like, okay, I'm almost done with my purchase. And they're like, no, I need to stand up and get my credit card. It's always like that. Yes. Always.
So and then you're thinking about this flow of doing these clicks, entering extra details. So alternative payment methods, it can be most popular, let's say, for this kind of easing the flow. It's either digital wallets with the QR codes or even without, or maybe crypto payments. When you simply you scan the QR, click the button, confirm, that's it. Or for example, with the mobile payments in Africa, you select that you want this payment method, just only to select your mobile carrier, and then you right away receive the notification to your phone, just complete the purchase. You requested, yes, I want this. So you shouldn't go to take a card, remember the address, all of this. It's very fast in a few clicks. That's why actually alternative payment methods are winning over the credit cards, because it's faster and more secure.
So it's actually also cheaper. I have a sales side argument to make also. The cost of participating as a merchant in the ecosystem is very, very difficult. And I'll give an example I adore seafood. So you go to Indonesia, 285 million predominantly young people, average age is under 30, so very digitally native. In the age of the $25 Android phone, the penetration rate of mobile devices and internet connected mobile devices is 70-80%. So everyone has a phone, but as a merchant, expecting a merchant to spend $1,000 on a POS terminal that accepts Visa or Master is if you go to buy a fish from the fish market and the fisher just came out of the water with their boat, which is parked out back, and now you expect him to buy, or her to buy $1,000 worth of equipment to be able to accept your card. Well, the boat costs more than a POS terminal, or just as much as a POS terminal. So why would they want to spend this kind of money to participate in an ecosystem? That the reason why the POS terminal is so expensive is because it's legacy technology. In fact, I urge you or any of the listeners currently hearing this recording to find technology more archaic than the magnetic strip on their credit card around their home. Right, it's something that we kind of the card duopoly, I would say, the Visa and Master duopoly have us in the West, in the OECD markets. They have pushed us into an ecosystem that we now consider normal, but is not necessarily as secure or as fast or as streamlined as modern internet connected everything allows us to kind of participate in. So if there's a one way to kind of look at it is that I think emerging markets just leapfrogged this entire ecosystem of POS terminals and acquiring banks and so on and so forth, and they just went into more of a software solution, which is of course cheaper. The cost curves of software are much better than hardware in any shape and form. So that's what I wanted to kind of give as a perspective.
Yeah, definitely. And of course, their advantage is also they don't have that much legacy. So of course, for us, we are completely thinking that the methods we are using for ages are the only methods, as in many other things. So definitely, it's I believe it's easier when there is much less legacy, getting a higher penetration of this kind of payment methods. But
so imagine going directly into electric vehicles and then not having all the gas stations and refineries and all those things that actually make consumer feel possible. So that's what happened effectively, right? They were able to just leapfrog this multiple generations of things we had to deal with for the last 40, 50 years. I mean, I think the first cards, the charge cards that started in the US and what became today Visa, they started in the 50s. I think the first commercial charge card was 54, 56. And if you look at actually Wikipedia photos of them, they haven't changed much in 70 years.
Yeah, that's unbelievable. Yeah. And you, Alex, mentioned also about Indonesia, a really young population. And this is basically what is happening in the majority, if not all, emerging countries. So the percentage of young population, it's much higher than the one we have in Europe. So I'm really curious in understanding how do you make sure you can successfully reach out to this segment of the population and that it's mainly forgotten by the majority of the other players, especially when we talk about Europe or US?
The main important object in the purse of the young person is the cell phone, or even just the watch. So they prefer not to carry cash, money, and to have all the necessary information on the phone. And that's also the tendency of the different APMs. More of them are more native and more convenient to be used with the cell phones. So we, from our side, doing the main input on making sure that the payment methods are, first of all, popular in these countries and also more mobile friendly, because we see that this is the opportunity to make sure that the payment methods are using as much as possible mobile flow, and it's easier. This is what people will choose eventually. They're already choosing to do the payment with the mobile. And when we're doing the researches like when we're loading our payment page, in where usually people loading our payment page, if it's mobile device or it's the browser. So now more and more every year the mobile devices are winning because this is what people using for payments.
Yeah, and of course, I mean, if you are able not to get someone out of there for having everything at a click, it's, in terms of user experience and frictionless, it's the best option, I believe. Let's zoom out for a second from the emerging market narratives, but let's keep talking about the young generation. So what we see frequently right now is that many of the purchases, as you were mentioning, Valerie, are made basically through your phone, but also a lot through social media. So we see a lot of brands right now that are pushing a lot to be able to sell directly through Instagram, TikToks, and so on. Which is something that we are actually not really used to if we compare to not even that many years ago. How is the payment infrastructure adapting to this new trend and necessity from the merchant side and, of course, the consumer side?
So perhaps I'll jump in here. I think, and having spent a number of years following this general narrative arc, it's right in line with the way consumer behavior really changes, right? I think in order to kind of add more duct tape and quick fixes to the security of card payment methods, they one of the first security innovations, and I'm sorry for taking you ladies back to the 60s again, but one of the first innovations was the CVV code. So that when a card is changed, a person who has a copy of your card in some hotel cannot just keep charging that card. And so after the CVV, a pin was added, and then a chip was added.
So actually, CVV was...
it was a security feature at first that actually prevented your end expiration date too. The first cards didn't have either of those.
Of course.
So those were added so that when your card changes, and of course your card will change periodically as a security feature. Now, of course, knowing what we know about digital technology right now, this is not a security feature at all. Some teenager on some darknet forum is selling it by the millions, these cards, right? So that actually inherently creates a lot of risk in the ecosystem, and of course dumps the cost. All this cost is passed on to all the card holders out there. Right. At the end, it's not that the banks accept this fraud and are going forward with it without noticing. Of course, us, the consumers, are the ones that actually have to pay for the entire overall risk in the ecosystem. And with time, more and more quick fixes were made, in which effectively today, having to go through a European payment flow with 3D Secure and getting an SMS and perhaps like a physical letter from the Pope in order to ensure that the transaction will process.
Let's not go into that, Alex. I'm like, I have such a battle against all the procedure that my credit card holder it's making me doing every time I try to buy whatever. So it's like I'm the worst person. I'm all on your side, guys.
Yeah, so I mean, that kills conversion. We already know this. There's a very solid science as to how the fact every step you take or every step you add to the process hurts conversion. And one thing we do is we optimize a lot, and this is, I would say, a good chunk of Valerie's focus is to optimize these payment flows to reduce the amount of clicks people need to put in, so that we can create this mobile native experience. At the end, 80% or more of 80% of clients that go through our payment flows do this on a mobile device, which allows us a great degree of flexibility of quickly doing these multi-factor authentication processes based on the provider or whatever the provider security features are for their local country. The Gojek ecosystem, for example, in Indonesia, we used Indonesia as an example. That allows us to create a very immersive payment flow, right? They would see an ad online or a purchasing opportunity online. They'll go through the checkout process, and we actually generate a link that pops the payment app. They approve it on the payment app, and then the payment app returns them back into their checkout process, right? So it's seamless, it's fast and secure, because inherently it's multi-factor. We already know that young person out there is holding a phone in their hand, and we know that phone is authenticated for payment online. The fact that there's like a third bit of plastic that us in the West have to dig through, retrieve, and read off numbers is something that is just a legacy. It's something that we inherit,
exactly.
We've been caring for a while. So as we us folks living in the West, as we're getting older and older, the majority of the young population is actually in emerging markets, and so they're a lot more digitally savvy. They're a lot more native to these mobile ecosystems than we are, and you'll be very surprised as to how, especially in Southeast Asia, how they approach the mobile ecosystem. It just brings a smile to my face every time I look at how these youngsters are just embracing connectivity. When I was growing up specifically, and maybe I'm dating myself, right? But I could never imagine that at pace at which mobile communication could evolve, and of course payments with it. So we have set a strategy for a few years now to be really on the forefront of this and to be able to translate really these peculiarities and specifics of these local markets and understanding of how they work into something that a Western merchant client of ours can actually consume in a reasonable way. And so we have to translate this cultural narrative between, how an 18-year-old Indonesian with a phone in their pocket thinks to how European payments executive thinks for some, merchant.
Yeah, with a huge digital divide.
Yes, there is. Yeah. I mean, there is a digital divide there, and really, I guess we focus a lot on just trying to put these two ends together and make them understand each other.
Makes sense. And I'm gonna ask you at the end about the future of how do you imagine the future? But let's keep it for later. So we're gonna now stop for a very short break, and we will be back in a minute.
ZotaPay is a payment gateway service that enables online businesses to access a wide range of alternative payment methods to suit their specific needs and those of their customers. With their connections to more than 1,000 financial institutions around the world, ZotaPay helps companies branch out into emerging markets, ensuring that their products are accessible to anyone, anywhere. For more information, go to ZotaPay.com.
And we are back at Breaking Banks Europe together with Alex and Valerie from ZotaPay, talking about alternative payment methods. So guys, we already deep dive into quite some interesting topics, I think. And the second part, the first question I want to ask you, it's more about the merchant side. So we talk a lot about consumers and young generation approach to digital payments and so on. But let's talk a little bit about the other side of the fence. So the merchants. How can merchants leverage the use of alternative payments and be sure they reach to this huge chunk of people that can buy from them?
Sure. So first of all, we offer, let's say, the number one question in front of us was how to combine all of these alternative payment methods for the merchant. How specific end user can know that he can pay with variety of different payment methods, because when we offer this, it means that end user can select out of different opportunities what is actually suitable for him. More options to pay end user has, meaning more successful ratio merchants traffic has. So we combine it all in the smart cashier page, which is fully customizable, which can be customized by the merchant. Merchant can decide what to enable, what to disable. It's also listens to different kind of risks. So it has deeper logic inside, but eventually we are in a win-win situation that we can offer all the possible local payment methods on one page, on one plate to the end user. And even if we are offering, let's say, online bank transfers, it can mean that behind these 10 banks, we can have 20 different providers, which also improve the approval ratio, because we are trying to make as much as possible integrations even for one and the same payment methods. And obviously merchants winning from this, because we are offering better solutions, which more stable approval ratio, stable traffic, and eventually end user ending with a big amount of options for the payment. And also we started the conversation that the APMs over the credit cards, they are more secure. So obviously that's way lower risk exposure in the payments, which definitely merchant can like more because they feel more secure for their funds. Or in some markets, for example, especially some of our merchants asking us, how are you so successful in China? Like we tried, oh my God, it was horrible experience. How did you manage? It took us years, but eventually we do have our own risk mechanism, how to make funds secure even inside of China. So this is part of our service to our clients. We just want merchants to be happy that they can offer as much as possible payment methods for their end users.
Nice, very nice. And let's keep talk about the differentiator factor that makes ZotaPay quite successful. So I'm not sure you are aware of this, but our audience is definitely is. We launched recently a program called the Breaking Payments, where we interviewed quite a lot of payment companies, especially the new payment unicorns. And what we notice is that they are all competing on payment orchestration and alternative routes. So they are all looking at that space, and it makes sense, as we said before, because the opportunities are huge. So what do you think are the differentiator factors in the case of ZotaPay, for example? Because I think that price cannot definitely be the one that makes a difference. What do you think?
So we, first of all, handling not only integrations to different payment providers, but also payment money management and also customer service. It all comes together in a package to the merchant. Meaning that, first of all, we are taking care that we can adapt the local payment flow to the most convenient for the end user. So less clicks, more approval ratio, this is what we know. And more we're opening new country, more we see that they are unique, the payment flows, to what end user gets used to. It allows us also a bit to play and maybe to have some better ideas how we display it on our payment page and how we guide the end user with as less as possible like steps or places where he can stuck and not to complete the payment. But that's only one obvious piece of the story. Besides this, the money management, how to take the funds out of this country. It's also our team is handling. And it's a very big story into which most of our merchants don't even want to start because, okay, you can, each of the merchant, especially big merchant, can complete the payment, like the technical integration. But then how you extract the funds. So our team already have the money changers, the contacts,
the global treasury
ecosystem, yes, ecosystem, and people know how to work with each other and how eventually to make sure that these funds, first of all, secured and can be delivered on time. And besides this, it's also one of the important factors, and it was very nice comment of one of our biggest merchants. It's actually customer success, because one of our merchants decided, I can do India. I can handle this. They made technical integration. They even found a way how to take funds out of there. They simply couldn't work with their customer support. And they said, no, we are going to you, ZotaPay, because we know that you provide us quick, efficient service. So we are taking these headaches on us. Our team is handling all of this and making sure that merchant receiving best service ever and never stays unresponded.
Yeah, so basically we win for everybody, the customer and the merchant. That's and ZotaPay, of course.
I think there's a slightly more boring reason that is worth mentioning too. I mean, we're currently doing this recording in Tel Aviv, but we have offices in 7 countries, and just in the Tel Aviv office, there's, I think, 31 or 32 different nationalities working in here. So it's very difficult to use inappropriate language in any language because someone else speaks that language too. And this gives us a really boring diversity advantage, the ability to manage these relationships that take a while to build. And a lot of this is trust in emerging markets. I think a lot of the Western payment ecosystem focuses on cards, which means at the end you're just getting through intermediaries that will do Visa and Master for you, right? No matter how you slice the cake, you end up Visa Master, right? So whether you go directly or through third-party PayFacs or any of the sort, I think that in alternative payment methods, and especially in certain countries, because of the ways their ecosystem developed, and because of support from central banks and regulators, they're just able to compete on cost the traditional card providers already, and that really gives us an advantage over there of saying, you know, Mr. Merchant or Mrs. Merchant Executive, you are, you know, spending a tremendous marketing budget, and at the same time you're pulling some emerging market out there, and the brand recognition is incredible because you're maybe advertising in the World Cup or football or anything of the sort, but then, you know, the conversion rate is abysmal. So when we show up and say, look, you could improve your conversion rate by the virtue of just accepting whatever everyone carries in their pocket. I think by the last FIS Global Payments report, I think it was around 17% the penetration of Visa and Master in Indonesia. We'll take Indonesia as an example again, right? So under 20% is nothing. So I just 1 out of 5 person, you know, that you might be able to target will be able to pay you. And I think the boring factor of us being able to manage these relationships has really given us an advantage. To say the least, it's a marathon and not a sprint, right? So it's not whoever has the fanciest bit of tech or the best salespeople. It's really whoever is able to do this year after year after year, over and over again. And that's where I think the long-term value lies, and our customers recognize this, and we have a high loyalty as a result of our ability to manage this over time and reliably. I think the majority of our cycles here are really spent creating technology around the processes that we establish.
And let's talk about the technology indeed. So before, let's deep dive a little bit into how the technology has evolved during the years, because as we said before, we have seen quite some changes in the behavior of people, but also, I believe, in the technology that is applied. And let's also see how ZotaPay is leveraging on the technology.
So we developed our own gateway. We call it MetaGate. So it's our own technology, it's payment gateway, which allows us to orchestrate payments, track the payments, calculate balances, to do a lot of different things, which helping us to work. And the main thing is, since the goal of the company was that the credit card, it's not everything is spinning around credit card. We needed to make sure that this new technology, which we developed, the payment gateway, is not thinking like, first of all, is working with the alternative payment methods, because alternative payment methods, they have unique needs. If we are talking from the risk perspective, they require different vision on how the risk system and risk rules needs to look like for the APMs. When we're talking from the point of view how we want to orchestrate the payments, to route the traffic, to create this payment strategy and change different providers, it's different from what credit card wants. Or even simply how our merchants will see details about their order, because when inside of the back office, because if you're talking about the credit card or just simply bank transfer, of course, they want to see the number of the credit card. This is the main point, or even out of the experience working with another gateways for which credit card was the main North Star. It's not for us, but everything was designed only around the credit card. So when it comes to APMs, it didn't have the necessary information about the payment. It was not user-friendly for our merchants to read the information about alternative payment methods. For example, when we're talking about now one of the most popular alternative payment methods, crypto, it requires completely different view on the information which needs to see about the transaction. And also it can be more than one transaction within one payment. All of this we needed to adapt. All of this we needed to think about and make sure that we can store it on our site, show it on our site, and it will be all user-friendly. So with more payment methods we are integrating, more with like adapting our payment gateway to work with these new alternative payment methods, and it is our pusher for success.
And you mentioned crypto, and of course, when we talk about emerging markets, this is a topic that always come up, because of course, despite the fact that people, my friends, can be happy. I don't know how many WhatsApp groups I'm in. Did you see that this went up or went down? And I'm like, yes, guys, let's talk about something else. But actually, digital assets are quite a tool for emerging markets, because over there they can make an impact and a differentiator factor. So I know that you use stable coins to compete against the SWIFT SEPA systems. So could you tell us a little bit more about this and how does it work?
No, I'll probably jump in. So let me try to separate as much as I can the sort of the two tracks of folks on WhatsApp, whatever coin goes up or
yes,
down.
Please.
Without using many explicit words here, I think a lot of the buzz around digital assets currently, and it's pretty obvious, is around this sort of a speculative, most like a blockchain-based casino, really, than any meaningful way to build digital businesses on. But that does not mean that in 5 years, one of the or some of the biggest companies, the hottest companies in the space might be a DAO that is run by a bunch of very creative folks who are able to actually find killer features for the blockchain itself. So let's split off the sort of the speculative craze today with a very I would say promising and already stable uses of blockchain tech. As you're well aware, there's a significant growth in stable coins between Circle and Tether. I think there's about 140 billion of issuance, which is a significant amount already. And there's many players on the ecosystem that just managed to connect the dots. If I move balance of that is over a few $100 or euros via SWIFT or SEPA, all of a sudden it's just cheaper to move it over stable coins, right? Today, and the way we look at the digital asset space is more of a enterprise treasury instrument for now than something of a payment method. There is a lot of demand for payment methods. As us being a B2B company, there's a lot of demand on behalf of our merchant base for crypto payment, direct digital asset payments, and we're seeing this go up. But our focus is on just creating modern, cost-effective treasuries, and that really helps us reduce cost. The traditional banking system, just like the traditional card system, of course, the card duopoly has figured out a way to extract, we believe, an undue amount of value from the participants, both SEPA and SWIFT alike, for what today effectively, perhaps in the 70s and 80s when some of these systems were being built, the software cost structure looked different than it is today. But sending 100,000 USD via SWIFT versus sending 100,000 USDC on Ethereum, the prices are so vastly different, and you're sending effectively the rail is different. You're moving it from one financial institution to another financial institution, and yet the cost curves is just so vastly different. And I think that's really going forward sort of a challenge to these big players out there. And we're seeing digital banks start sprawling up and down all across the Western hemisphere, even though some of them are now in the newspapers and in slight trouble. I think, like in any industry, at the end, some strong players will find their footing. And I really see a significant challenge to SWIFT and SEPA when it comes to especially the public chains of today with stablecoin issuers. So looking forward, though, and I think taking off my treasury hat and looking forward as to what user adoption might look like, I think there's the most fundamental thesis is that there's just so much brain power being spent on developing technologies on top of the blockchain that it's just it's pretty much inevitable that we'll find some other killer features other than moving value, USD denominated value, and over the next few years, I expect a lot more things to start digitizing themselves, and a lot in terms of their ability to conduct transactions on public chains, and a lot more applications to kind of start sprouting. At the end, the digital ecosystem itself, it doesn't mean much unless you're able to communicate from it to the traditional ecosystem, right? So effectively going from digital assets to fiat and back. So I guess the players of the future and banking institutions out there, such as the stablecoin providers I mentioned, but also others that are no doubt currently in planning or launching or are to launch, they will provide a significant challenge, both in terms of acceptance and of what just a global currency means. I think we as our propensity and us growing up and spending our entire careers in fairly stable financial environments, such as the euro or USD areas of influence, effectively OECD countries, I think that it's very difficult for many of us to really fathom what it means to have an 80% inflation in 1 year. Right. And once this happens and once it erodes a generation worth of acquired wealth, I think young people are feeling disillusioned already at this. And the only way this can go is further adoption. Now, if forecasting is clearly very difficult, and I'll leave this for well-read analysts to do, but the only thing that I can say with a fair degree of confidence is just adoption. With every year, we're seeing just demand from people who were just skeptics a few months ago, and they're like, "Oh, we heard the Treasury now." We managed.
So it's just a matter of time. Yeah, it's just a matter of time.
And it just takes a little while for adoption to occur, but it's just going to happen. Yeah. There's no other way. Cost curves always work.
And you were also mentioning the cost, indeed, and let's hope that soon even smaller transaction could be very much cost effective, because right now you said that for digital assets, even right now, for some amounts, it's much more convenient than the SEPA SWIFT methods. But let's see what the future it's having for us. So, about this, I have a very last question for you guys, because unfortunately we are almost at the end of the episode. But so, talking about the future of payments. So we all hope, or at least I do very much, even though I'm Italian and I'm from a very cash-driven society. I really hope that at some point
once it phase out the 500 bill euro, yeah.
Yes, exactly. No, you cannot imagine. Every day I have huge fights with taxi drivers because they are very much used to cash. But let's not go into that. So I really hope to have very soon a fully cashless society. But I don't know what you guys think. So how do you imagine if we could jump or with a crystal ball right now, or really jump into 20 years from now? How do you see the future of payments?
I think it's no need even to jump 20 years. We see already a decent, solid way forward to the cashless world, because more and more countries, they're switching to more cashless way of paying people to the bank accounts, switching even the governmental fees, let's say, and services also to online, creating different apps for people to pay also via online, public transportations. Eventually, we see people which prefer to go shopping online, to order delivery online. So it's all already happening, and APMs see this, they're picking up, and this is how they also develop, and it's all merging in like together and fulfilling each other. People's need, here's the payment method, how they can fit this to be done and actually to be done. And we will be in the full cashless world way sooner than 20 years. I would say if now I cannot imagine going out of a house without my phone because everything is there. So probably in 10 years, we will not even need a phone to pay. It will be like something else and even quicker. So we'll see.
Nice. So let's do another episode in 5 years then. So we will see where we at.
Yes, indeed. So one thing I kind of wanted to add about this is the fact that just the velocity of funds is different now. So I like to think of, looking at a few data points that happened over the last few years and kind of continuing that track forward and seeing where that dot leads in 5 years. And I think it's just the velocity of capital has changed. Cash is effectively slow capital. You need to take it somewhere and pay someone. With all
the risk connected.
Yeah, yes, with all the risk connected. I mean, imagine what it used to be just 50 years ago. Before even Swift and SEPA, yeah. So I think that just looking at how if I could just draw a parallel from just the adoption of the internet and news in the news cycle. News used to be something that a person would have to bring in a newspaper form and or once or twice a day on half an hour news segment on television. But today the everything happens at the internet speed, right? And internet speed is fast speed of light. So I think that's where the consumer demand effectively is going also. And that's what our future will end up also looking. Whoever is not able to operate at the speed of the internet is ripe for disruption, and should be looking right behind their shoulder for innovation that is to come.
Great. Thanks a lot, guys. So we reached the end of this episode. I think we highlight a lot of very interesting topics with you. So I'd really like to thank you both. Thank you, Alex. Thank you, Valerie, for joining us.
Thank you.
Thank you, Francesca.
And thank you very much to our audience. Of course, keep following Breaking Banks Europe on all streaming platforms and on our social media. I'm Francesca Aliverti, and see you next week. Ciao.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcasting cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.